You're listening to AI Prism from Seoul Economic Daily.
It's Monday, May 11. I'd like to share some thoughts about stock investors. We're doing a deep dive into today's Seoul Economic Daily reporting, and while we have a really sharp, data-dense briefing for you today.
Yeah, if you are actively trading right now, there's a lot to navigate. You've got the KOSPI hitting that historic 7,498 record, shifting foreign capital, the looming Samsung strike, and retail flows into U.S. semiconductors.
Right, let's start with that KOSPI record. So 7,498. The main board, which, houses your heavy industrials and large cap tech companies, is up like 78% year to date.
It's massive. And brokers are they're throwing out target price upgrades at triple the rate they did last year.
Yeah.
We saw 585 upgrades in just 7 days. But beneath that headline, the coverage is incredibly skewed. Like 82% of analyst reports focus purely on KOSPI large caps.
Wow, so it feels exactly like a VIP room scenario. Imagine this massive club where the analysts and institutional money are exclusively serving the large cap tables in the KOSPI VIP section. Meanwhile, the KOSDAQ, which is the secondary market for your tech and biotech stocks, is just out in the alley completely starved for attention. Even major K-pop names over there, like HYBE and SM, are getting downgraded right now.
Right. And you see that VIP room dynamic with foreign capital, too. Look at the broad Korean market proxy, the EWY ETF. Over the tracked window, that fund actually bled $1.0145 billion in outflows.
Wait, $1 billion in outflows, but the main index is booming.
Exactly, because at the exact same time, the U.S.-listed Roundhill DRAM active ETF absorbed $1.9538 billion in inflows.
Oh, wow. So foreign investors aren't fleeing Korea, they are just, surgically concentrating into AI memory. Specifically HBM, or high bandwidth memory, which acts as the crucial high-speed data lane for AI processors.
Right. They are hyper-focused on the giants providing that HBM. That means SK Hynix, ticker 000060, and Samsung Electronics, ticker 005930. Those two alone make up 48% of that DRAM ETF.
So they are essentially ignoring the broader Korean macroeconomy and just using Korea solely as a proxy for U.S. hyperscaler AI infrastructure, right?
Yeah, they want pure play memory exposure without the dead weight of non-tech sectors dragging down their returns.
But while holding Samsung for that pure play exposure brings up a pretty massive binary risk on May 21st, there's a potential general strike looming.
Right, so the union is demanding a bonus pool of 15% of the first quarter's operating profit. That comes out to 51 trillion won, or about $35.7 billion US dollars.
And management is holding firm at 10%, right, which is 34 trillion won, or 23.8 billion US dollars.
Exactly. And it is easily the single biggest operational threat to the KOSPI right now.
Wait, but is it really just a simple union versus management dispute, though? Because looking at the source notes, there is massive tension between the divisions themselves.
Oh, definitely.
The highly profitable memory unit is effectively subsidizing the massive losses of Samsung's foundry division, so the memory workers feel they are paying for the foundry's failures.
Yeah, it's getting messy. And the fallout could be severe. We saw a previous half-day strike drop memory output by 18.4%. That explains why firms like Citigroup and JP Morgan are already cutting target prices.
So as an active trader, how do you navigate that risk?
Well, you might execute a relative strength pair trade hedge if those negotiations fail.
For those newer to the mechanics, how does that actually work in this specific context?
A pair trade just means you go long on the stronger asset and short, or simply avoid the weaker one in the same sector. So if you want to keep your AI memory exposure but dodge Samsung's labor gridlock, you might pivot your capital into SK Hynix.
Oh, I see. You isolate the upside of HBM demand while hedging against Samsung's specific internal risks.
Exactly. And meanwhile, as institutional money sweats over Samsung's labor negotiations, domestic retail traders are making really bold moves stateside.
Right, we're seeing CO-hack ants, which is the local term for Korean retail investors buying overseas stocks, just absolutely swarming Intel.
The momentum is staggering. Intel saw $475.68 million in net retail purchases, jumping 102.36% amid shifting AI CPU demand.
It's a clear signal. These retail traders are deliberately complementing their domestic memory exposure with U.S. processor plays.
Right, and many are utilizing Bit2, which is the local term for debt-driven, leveraged investing, to maximize that cross-border portfolio. They're basically building a complete AI hardware ecosystem.
Right, linking Korean memory chips directly to American CPUs.
It is an aggressive, highly sophisticated play, but it leaves you with a really critical question to ponder. As global capital remains hyper-concentrated in a handful of memory and CPU giants, you have to wonder, will this AI hardware rally eventually broaden out? Or is this VIP room exclusivity going to be the permanent new normal?
That's today's AI Prism Stock Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a IFRO award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.